Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay, we talked yesterday about the daily mid-band, the key price area, key resistance area, 95 to 3,000, and a failure at middle band or taking out the middle band would open the upper band. Taking it out would be a move that could potentially get down towards lower band, 100-day. You can see that they've done the break to the downside. I want to get to the hourly chart because it's more instructive. So, here's your open, 9 a.m. hour. They took it up right back up to the Globex highs at 94, but they couldn't get, they couldn't get through. This has been a key resistance area for some time. All through here. And this time they did the hard break through weekly pivot that kept on going. So, great day in the room. Great way to start the month. We were short 86, laddered down short 69, laddered down short 53. Got long a little bit there at the end. And then what we ended up doing was settling into shorts last night in the 44s. We rode that into profits this morning. Took 25 handles on 2/3 of those trades and have locked it in for 10 on the last third. So we've locked in a 20 handle trade just in the overnight. So, it's doing the hard break. Where did it stop? It stopped at 16. So right in the, right in the area of the 200-day. Let's go back to the daily here. So the continuation 200-day is 28.7622. On the front month, however, we're there. 29.16. Okay? So the point I'm trying to make to you is this is a very key test, very key area where it stopped. 29.16, if that proves to be the end of the road, it doesn't mean we're going to do a V or bounce straight back up or do whatever. They have to deal with the lower band now and, potentially a band ride. We talked about the tightness of the Bollinger Bandwidth yesterday and how things were kind of setting up to go ahead and open up. It's trying to do that now. If it converts 16, then you start getting into some of these lower areas. You start talking about the lows from back in August. On the front month, that's 28.11. That's a ways down. I think it's going to take some doing, absent news, to convert that 200-day exponential at 29.16. We'll see. They have rallied it from 16 up to the 26 area. 26.5 is critical. That was an attempted rally at about 5:15 in the morning that failed down to the lower low. So we'll have to see if they can continue to make lower lows. But if you're wondering where we've stopped right there. Front month, 200-day exponential. All right, so that gives you the lay of the land for the day. We're going to let our runners work from up above. If you start to see an inability to make lower lows, you start to see higher lows, then you can take a look at after we open, you can take potentially a look at a long to move back up to the 30 area. Volume weighted average price is sitting right around 31, but I'm not committing to that until I really see the bulls try to do something sustainable. And they can. The bears have blown these types of moves so many times over the years that it's almost become, it has become routine. That said, if 29.37, this hourly mid-band, wants to be resistance, if it continues to be resistance, it's going to be difficult for the bulls to get anything sustainable going. And at that point, I would expect potentially a lower low. But keep an eye on 16. It's a big deal. Take care. Trade them well. More stuff on social. You should be in here trading with us, bottom line. Take care. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.